Ever wonder what the richest people in crypto do when the market tanks? While most panic and sell, whales are making massive strategic moves. It's like they know something we don't. And today, we're pulling back the curtain. We're not just talking Bitcoin. We've tracked the blockchain and found whales are quietly buying up specific altcoins by the truckload. Why? Because they see a once-in-a-cycle opportunity to buy at rock-bottom prices, while everyone else is running scared. In this video, I'll reveal the 4 altcoins whales are accumulating, why they're doing it, and how this could change your entire approach to investing. If you want to spot the next 100x gems and think like a whale, you can't afford to miss this. Let's dive in. First up, Ethereum, the king of altcoins. Known for its robust and versatile blockchain, Ethereum has cemented its place as the second largest cryptocurrency by market capitalization. But it's not just about the numbers, it's about the technology and the ecosystem that Ethereum has built over the years. And the digital backbone of Web3, Ethereum's blockchain is the foundation upon which decentralized applications, or dApps, are built. These dApps are revolutionizing industries from finance to gaming, creating a new digital economy that operates without intermediaries. Whales aren't just buying a little ETH, they're scooping up hundreds of millions during crashes, treating it like prime digital real estate. These large-scale investors understand the long-term potential of Ethereum, seeing it as a cornerstone of the future financial system. Why? Because Ethereum powers DeFi, NFTs, and the largest developer community in crypto. Decentralized finance, or DeFi, is transforming traditional financial services, offering lending, borrowing, and trading without the need for banks. Meanwhile, NFTs, or non-fungible tokens, are creating new ways to own and trade digital art and collectibles. When prices drop, whales see a discount on the future of the internet. They recognize that these dips are temporary, and that the long-term trajectory of Ethereum is upward, driven by continuous innovation and adoption. The shift to proof-of-stake made ETH scarcer, with staking locking up supply. This transition not only reduced the environmental impact of Ethereum, but also introduced a new way for holders to earn rewards by participating in the network's security, and deflationary tokenomics kicking in. With mechanisms like EIP 1559, a portion of transaction fees is burned, reducing the overall supply of ETH and creating deflationary pressure that can drive up the value over time. Institutional giants like BlackRock and Fidelity are piling in, recognizing Ethereum's potential to reshape the financial landscape. These institutions bring not only capital, but also credibility, further legitimizing Ethereum as a serious investment. And spot ETH ETFs are opening the floodgates for even more capital. Exchange-traded funds make it easier for everyday investors to gain exposure to Ethereum, driving demand and liquidity in the market. Whales are front-running this, accumulating ETH before the next wave of adoption and innovation hits. They understand that being early in this space can lead to significant returns as the technology matures and becomes more widely adopted. They're not worried about next week's price, they're betting on the next decade. These investors have a long-term vision, seeing Ethereum as a foundational layer for the next generation of the internet. When you see ETH drop, remember, whales are buying the fear, not selling it. They see these moments as opportunities to accumulate more of a valuable asset at a lower price, positioning themselves for future gains. Next up, let's talk about Solana, the comeback kid of the crypto world, and a project that's been underestimated time and time again. While many were quick to write Solana off, it's quietly been staging one of the most impressive comebacks in recent blockchain history. After the FTX collapse, Solana was left for dead by most of the market. Headlines screamed disaster, and the price chart looked like a free-fall. But while retail investors panicked, the whales, the big money players, saw something different. They saw a fire sale on a high-speed, scalable blockchain that still had all its core strengths intact. For them, it was an opportunity, not a death sentence. Solana's technology is its secret weapon. It's capable of handling tens of thousands of transactions per second, and it does so for just pennies per transaction. Even when the market was at its lowest, developer activity on Solana stayed strong. Teams kept building shipping code and launching new projects, refusing to let negative sentiment slow them down. This relentless innovation is what sets Solana apart from so many other chains that faded away during the bear market. whales noticed the disconnect between the doom and gloom headlines and the reality on the ground. While the media focused on price drops, Solana's network was quietly growing. Daily active users started climbing again, and a wave of new projects, especially meme coins, began stress testing the chain's speed and reliability. The Solana ecosystem was buzzing with activity, and the whales knew that real network growth always wins out in the end. And then came the upgrades. Firedancer, a new validator client, promises to make Solana even faster and more resilient. Real-world projects like Helium and HiveMapper chose Solana for their infrastructure, betting on its ability to scale to millions of users. These moves signaled to the whales that Solana wasn't just surviving, it was evolving and getting ready for the next wave of adoption. Behind the scenes, institutional interest began to quietly return. Major players started exploring partnerships and integrations, and Solana's user experience, especially with wallets like Phantom, began winning over the next generation of crypto adopters. Big names like Visa and Shopify started experimenting with Solana's tech, hinting at a future where mainstream adoption could be just around the corner. The smart money knows that timing is everything. Whales are buying Sol now, quietly accumulating before the next Solana summer and the mass adoption phase that could send prices soaring. They're not just betting on a token, they're betting on a network that's proven it can survive the worst and come out stronger. But it's not just about the technology or the price action. Whales are investing in the Solana community, a group of builders, developers, and believers who refuse to quit, even when things look bleak. This battle-hardened community is one of Solana's greatest assets, and it's a big reason why the whales are so confident in its future. While others panicked and sold at the bottom, the whales loaded up on Sol at a deep discount. They saw the bigger picture, a blockchain that's fast, scalable, and backed by a relentless community. Now, as Solana rebounds, those early believers are positioned for the next big wave. The question is, will you be ready when the next Solana summer arrives? Third is Chainlink, crypto's invisible backbone. While it's not flashy, whales know DeFi can't function without reliable, real-world data. Chainlink's decentralized oracles power everything from lending to stablecoins, making it the industry standard. During crashes, whales see Link as a picks and shovels play, betting on the infrastructure every project needs. The upcoming cross-chain interoperability protocol, CCIP, could make Chainlink the Swift of blockchain, connecting every chain and unlocking trillions in value. As adoption grows, Link's utility and value must rise to secure the network. Chainlink's moat is deep, with integrations across the entire crypto space and new data services expanding its reach. Whales are quietly accumulating Link, knowing it's essential to the future of Web3. They're playing the long game, buying the backbone while others chase hype. Last but certainly not least, we have Polygon, widely recognized as Ethereum's most prominent and resilient scaling solution. In the ever-evolving world of blockchain, where speed and cost can make or break a project, Polygon has consistently stepped up to address Ethereum's biggest challenges. When Ethereum's network becomes congested and transaction fees skyrocket, Polygon provides a lifeline, offering lightning-fast, low-cost transactions that keep users and developers engaged. But it's not just about speed and savings. Polygon's growing list of high-profile partnerships is a testament to its credibility and potential. Major global brands like Disney, Reddit, Meta, and Starbucks have all chosen to build on Polygon, leveraging its technology to power everything from digital collectibles to loyalty programs and social platforms. Even Nike, a giant in the world of sports and fashion, is embracing Polygon's infrastructure. These partnerships aren't just for show, they signal a massive wave of future adoption, as more companies recognize the value of scalable, user-friendly blockchain solutions. Behind the scenes, Polygon is undergoing a major transformation. The upcoming shift to Polygon 2.0, along with the introduction of the new POL token, is seen by many crypto whales as a true game-changer. This upgrade will power a network of interconnected zero-knowledge chains, making the entire ecosystem more secure, scalable, and efficient than ever before. Zero-knowledge technology is widely regarded as the future of blockchain scaling. Polygon is at the forefront of this movement, pioneering solutions that allow for private, secure, and ultra-fast transactions. By integrating zero-knowledge rollups, Polygon is not just keeping up with the times, it's setting the pace for the entire industry. This innovation is attracting a new generation of developers. Thanks to its EVM compatibility, developers can easily migrate their Ethereum-based projects to Polygon, fueling a vibrant and rapidly expanding ecosystem. From decentralized finance to gaming and NFTs, Polygon is becoming the go-to platform for builders who want to reach a global audience without the bottlenecks of high fees and slow speeds. It's no wonder that crypto whales are quietly accumulating Matic tokens now, positioning themselves ahead of the curve before Polygon's new tokenomics and technology upgrades become mainstream. They see the writing on the wall. As Polygon's influence grows, so does the value of being an early adopter. Importantly, Polygon isn't trying to replace Ethereum, it's designed to complement and enhance it. As Ethereum's user base and transaction volume continue to grow, the need for scalable solutions like Polygon becomes even more critical. This creates a symbiotic relationship, where both networks thrive together, rather than compete. In many ways, Polygon is building the rails for the next era of the internet, Web 3. Savvy investors and industry leaders are betting big on the infrastructure that will carry billions of users into a decentralized future. With its relentless innovation, major partnerships, and forward-thinking technology, Polygon is proving to be the scaling solution that simply won't quit. There you have it, the 4 altcoins whales loaded up on during the crash: Ethereum, Solana, Chainlink, and Polygon. The lesson? Whales don't panic, they buy critical infrastructure and future-proof tech when everyone else is scared. This isn't financial advice. Always do your own research and never invest more than you can afford to lose. Study the tech, the team, and the community before making any move. Think like a whale, be patient, strategic, and conviction-driven. We'll keep tracking whale moves and uncovering more hidden gems in future videos, so hit like, subscribe, and turn on notifications. Thanks for watching, see you in the next one.